Hello Internet, this is a video tutorial of the Trend Exhaustion Stock Market Timing Spreadsheet, which operates in Microsoft Excel and is available from the HealthyWealthyWiseProject.com website. There's a saying on Wall Street that the trend is your friend until the end. The indicators in this spreadsheet measure the trend, measure the momentum of the market, and signals when the trend has reached exhaustion levels and has a high likelihood of turning and going the other way, of moving against you. The indicators are setup, combo, and sequential. The buy indicators are in green, the red indicators are in, or the sell indicators are in red. Setup buys are shown on column L. Perfected buys in column P, that's the signal. Perfected sell setups are in column AT, such as that example right here. Right now we're looking at the gold ETF GLD on a daily time frame, looking at some buys and sells. The other indicators, combo, we have aggressive versions of both combo and sequential for buys and for sells, as well as buying support levels, selling resistance levels, and a recycling indicator on buying and sell when the momentum is so strong that it's expected to continue in that direction. Again, you can look about the only cells that you have to enter on a normal basis is cell C7, where the stock symbol goes into, and C14, where you enter M, W, or D when you wish to look at monthly, weekly, or daily time frames. And you can look at any symbol available on Yahoo Finance, any individual stock, ETF, mutual fund, whatever, bonds, current commodity ETFs, whatever. Let's take a look at the S&P 500. You could enter the most common ETF, SPY, SPY, but you'll actually get the real data on the S&P with the symbol GSPC. You'll see the data come in. Like this, changing to a weekly time frame, buys and sells. Like to start with a monthly time frame to get the big picture. So let's look at the S&P 500. You'd actually, on the S&P 500, you could go back to 1950 if you entered, that's the earliest data available, if you entered 1950 there, but let's usually just start with the 90s. It was a roaring bull market for the S&P 500 in the 90s, and we had some recycling indicators basically saying to stay in the market as it was rising. And then we had a final setup sell indicator in July of 99 telling you to get out of the market. You see it perfected here at a level of 1328 on the S&P 500. It would rise a little bit more than that. But that was effectively the top, a great time to exit the bull market of the 90s, July of 99. And following it down on a monthly basis, we see we hit a setup buy, which is not perfected, and continues into an aggressive sequential buy signal in February of 2003 at a level of 841. On the market. So that was a 37% drop from its July 99 close that you could have missed or been out of the market, or you could have shorted the market, riding the bull market of the 90s up and getting out. And then this, of course, February 2003, a great time to re-enter the market. We had a bull market that continued, and May of 2007, right here we had a perfected sell that was, again, great time to exit the market. at 1530 on the S&P. Watched it fall. We had a setup buy in February of 2009, so we could have exited the market in May of 2007 based on this setup sell signal. Re-entered back in February, again on February 2009 at a level of 735, and that was a 52% drop in the market that you may have lived through. These trend exhaustion indicators could have gotten you out, or again you could short the market. And so we're back in the market. This is why it's good to look at a monthly time frame just to see the big moves. So we're back in the market in February 2009. So, and I mentioned you can look at weekly and daily time frames. I use weekly and daily more for individual stocks for entry exit points. But I will point out, say on the S&P 500, that March 2009 re-entry into the market was called not only by the monthly, but it was coordinated with a weekly signal. If I can pull it. Right here, right near the bottom of the most recent bear market, March 9th of 2009. We're re-entering because you're watching it on the monthly, and then you move into a weekly to see more granular entry exit points. You can, again, any Yahoo Finance symbol, individual stock. If you want to look at Apple, I believe it's AAPL. On a weekly basis, you can see the momentum in Apple, some entry exit points. If you want to look at mutual funds, Simco total return, it's in here. Start with the monthly for a bigger picture and work it down into a weekly and daily. These indicators are described. There's a section of the website dedicated to them. The spreadsheet does use a Excel financial add-in, which is available for free download from the website. Installation notes for that add-in and working with the spreadsheet itself are on the install notes. Rules for the indicators are on the tab Setup Countdown Rules. And again, there's a section of the website dedicated to these indicators. You can learn more about them. Any questions, you can contact me through the website, and hope this can help you with your entry exit points for individual stocks as well as the overall market.